Assalamualaikum and good morning to everyone in the meeting. I am Nur Alia Wardah binti Ahmad Bagia, CEO of the FNN company, with a very big heart to welcome FNN shareholders to this meeting. For today's meeting, my financial managers, Anis and Liana, will present the company's financial position and profitability performance for two recent years, 2019 and 2020. Before we move further, FNN Group is among the oldest, most recognized and most successful businesses in Singapore and Malaysia in the food and beverage, property and publishing and printing sectors. Furthermore, FNN Holdings Berhad Group is a Sharia-compliant company listed on Bursa Malaysia. In addition, the vision of the company is to become the leading total beverage company in Malaysia and the region, while the mission is to provide superior returns to our shareholders, excellent value for our customer and a rewarding career for our employees. Besides, the diversity of our product range and geographical operations are what distinguish FNN in delivering sustainable performance and growth to meet our consumers' present and future expectations. I am planning to expand this business and to get the source of fund. I'm forecast to obtain a loan. I will pass to Liana and Anis. They both will present and explain further about FNN company financial position and profitability performance for the year 2019 and 2020. And please state the amount of loan I should obtain for our next coming project. Thank you.
The liquidity ratio, which shows the firm's ability to meet short-term financial obligations, is divided into three different ratios: current ratio, quick ratio, and net working capital. The current ratio is used to show the liquidity. In 2019, the company's current ratio is 2.21 times, whereas in 2020, the company's current ratio is 2.42 times, which means that the current ratio in 2020 is better because it suggests that the firm is able to pay for the liabilities with the assets. As for the quick ratio, it is similar to the current ratio, but is a better measure because it excludes the inventories. In 2019, the quick ratio is 1.48 times, whereas in 2020, the quick ratio is 1.51 times, which tells us that the quick ratio is also better in 2020. Then, the net working capital lets us know if we have a positive net working capital, which means that the current asset is more than the current liability. FNN's net working capital in 2019 is 960 ringgit and 68 cents, whereas in 2020 it is 1,020 ringgit. Which means that they are both positive net working capital, but it is better in 2020. As for the trend analysis, for moving average trend, it decreases from 29.48 to 24.71 and then slightly increases to 24.77. For volume trend, it increases from 128.57 to 183.82 and then decreases to 94.36. For the profit chart, the pattern is inconsistent, but it was the lowest in 2010 and the highest in 2012. Lastly, the revenue chart is also inconsistent, but it was the lowest in 2013 and the highest in 2020.
Thank you, Ms. Liana. Assalamualaikum and good morning to everyone. I am Madam Nik Farhan, one of the financial manager of FNN company. Today, I would like to explain about our profitability ratios. Profitability ratio is a ratio that indicates the rate of profitability created on the sales. They show the amount of profit earned on every 1 ringgit of investment. As for the net profit margin in 2019 is 10.06% and in 2020 is 10.29%. There is a difference between 2019 and 2020, which is 0.23%. This explains that our net profit margin in 2020 are better than 2019. Next, return on equity. Our return on equity in 2019 is 16.22%, while in 2020 is 50.25%. We can see that there is decrease in the year of 2020, but it's just a small decrease. Lastly, return on asset in 2019 is 11.71% compared to 2020. Our return on asset is 11.65%. This shows there is a small decrease in 2020, which is 0.06%. So from my explanation, I recommend to our shareholders to invest more in our company because based on our profitability ratio, we can guarantee you to earn more profit in this project. My advice to our CEO is to obtain loan from Maybank because the interest rate for loan in Maybank is 6.5%.
Thank you, dear CEO and both financial managers of FNN Company. Assalamualaikum and very good morning. I am Wan Mera as a shareholder for FNN Company would like to give some suggestions and information about this company. Based on the financial position I have seen by the end of 2020, the debt ratio is high to total assets, meaning firms are making too many loans. But when viewed over the past 5 years, the company debt ratio is declining and the company is well protected by operating cash flow at the moment. So I can see that this FNN company will not experience any financial risk because the debt is not too big to handle it and it's still in the equity price. In addition, if viewed through profitability ratios, net profit margin in 2020 show a positive and high value compared to 2019. Besides, I can also see the return on investment in 2019 is higher ratio of 11.71% and slightly decreased in 2020 that is 11.60%. Is similar to the situation on return on equity. But the decline during the year was insignificant and the ratio of gross profit margin and operating profit margin was high and the value of the ratio is pretty good. Therefore, I believe that your company can still make a good change by increasing profits in the long run and succeed in achieving the profits that shareholders dream of, such as obtain high return in the long run while reducing risk. After all, your company still belongs to a well-performing company and still have the opportunity for me to invest in this company.
Hello and Assalamualaikum. My name is Liana. I am the financial manager of the FNN company and this is Anis, the assistant financial manager of the company. We would like to take a loan for our company and the reason for that is because we are planning on expanding our company. We are making some additions to the things we produce such as snacks and raw materials. Other than that, we are also making plans to expand our factory. The purpose of this project is to increase our sales and profits to have a better company performance. We have already discussed this project thoroughly and are sure of this decision. That's all from me, thank you.
I will explain about our leverage ratio. I would like to state that for our debt ratio in 2019 is 0.28%, while in 2020 is 0.24%. We can see that there is decrease in 2020, which is by 0.04%. For our debt to equity in 2019 is 5.3% and in 2020 is 4.1%. There is difference between 2019 and 2020, which is 1.2%. We can see that our debt to equity in 2019 is greater than 2020. For our company project, we have discussed to apply 500k of loans to accomplish our project. So, Ms. Fatini, what is your opinion based on the ratio presented just now? Does it fulfill your requirements for applying loans?
Thank you, Ms. Anis. I am Nur Fatinia Sarah binti Muhammad Yazid, a local bank representative from Maybank. In my perspective, based on the leverage ratio explained by the financial manager just now, stating that this company has a good leverage ratio, we can see that FNN Sendirian Berhad has a quite low ratio in terms of debt ratio, debt to equity ratio, and also in terms of time interest. Therefore, I think this company in the future may be able to control their debt. So, based on the data that was already analyzed by the financial manager, I noticed that the leverage ratio is quite good because FNN debt ratio decreased to 0.24% in 2020 from 0.28% in 2019. It demonstrates that the company has less debt in financing asset than the previous year. In other words, maybe this company can control their financial problem when looking at the performance of the leverage ratio. So, confirming to the debt equity, it had fallen from 5.3% in 2019 to 4.1% in 2020. compared to the debt equity in the year 2020 is better than 2019. It's implied that the company debt in financial asset is lower this year than last. So it is good for the company to have this kind of value because the company have lower percentage of debt to equity ratio. So my suggestion is yes, this company can take or make loan from the bank. It is look like this company have ability to control their external factor, even have been affected by the MCO that have been implemented by the government and so on. So this is maybe one of the reason why the company can pay debt properly for the year in 2020. According to the profitability ratio and other ratio, it is considered good in terms of overall financial performance. So it shows that your company can fulfill all the loan requirements if looking at the affordability of the world. And I predict your debt will decrease by next year. So I can recommend you to take a loan from our bank since your profitability is in good line.